Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of July the 4th, 2016. Now we have a holiday short week in the US with the Independence Day. We've also got a choppy week ahead with the non-farm payrolls. We've got the ADP report coming in on Wednesday and the payroll report of course on Friday. So with that said, let's get started. Now, looking at the dollar index this past week, we can see that the dollar has not made any gains since the Brexit. So we've had a big spike up in the market. I'm just going to bring this in now that we can identify, so everybody can see and we can identify this. We can see that this is basically right here. We've got a big bar up on the Brexit vote to leave. But as we can see, we've had one day of follow through and then we've been moving lower ever since. Now our upper trend line's coming in about 96.90, but our key vantage point level is 95.17. We have closed at 95.71, which is mildly bullish, while above that key vantage point 18-day predicted EMA. But the problem here is, again, when we look at basic price action, it's pretty easy to assess what's going on here. That we buy the rumor, we sell the fact, the risk on, the risk off. I'll talk about that more in a moment with the equity markets, but for now, as the risk comes back into the market, of course the US dollar starts to move lower. Now, once we've looked at all of these things, we can bring this into our lower time frames and start looking at the additional vantage point indicators. Now, again, we can see price moving lower off this form trend line the day after the Brexit vote, and the entire past week, the dollar has basically been moving sideways. It's made some gains against a few pairs, but ultimately, again, much like what I said in last week's Forex Weekly Outlook, that I really felt that this move was somewhat ridiculous, and it clearly overshot the mark. Now, with price action moving lower, we can see our neural index coming lower. Our short-term indicators from Vantage Point are basically picking up on all of this, guys, and it's telling us that the dollar's moving lower. Our predicted RSI could not hold above the 60 level. We've moved down to 57.7. And again, you know, we're looking for a hold above 50, not just a hold above 50 on the predicted RSI, but also above 60, and we're not getting it. Now, the position of the predicted MACD, I do like the way that looks. We've got a crossover to the upside right here, and of course, we're above that all-important zero line. So as long as the predicted MACD is staying above that zero line, the dollar is still going to carry some strength. But that 18-day predicted moving average right here, again, that's this number here from Vantage Point, very important number this coming week as we move into our ADP report and our non-farm payroll. So I don't expect a breakout play here on the dollar, either up or down, until after, at the very least, the ADP report. Now, we also have the ECB on Thursday. These are fundamentals we can't ignore here, guys. So we you know, I think the ECB is going to stay put. I don't think there's going to be any major changes there. And I do see a better labor report coming out on Friday. I think that, you know, much like what I've stated in the past, that it is these numbers are going to get very political, guys. And I don't think they're actually accurate numbers. So we've got to take it with a grain of salt. And again, but the ADP report will be a leading indicator for what's going to happen with the non-farm payroll. But much like last month, we had about, I believe we had a 200K ADP, and then we came in at 38K jobs. So something was very wrong, because the ADP report, guys, is never off that much. So we could see a big spike in jobs on Friday and significant dollar gains. Now, as we look at the S&P 500 and the overall equity markets here, we have absolutely massive resistance up here at the 2130 area. Only a sustained pressure, only a sustained break above that area, excuse me, will take the pressure actually off the downside. Now, the equities are moving higher, but again, it truly is, in my respectful opinion, a house of cards here. We've had a massive move down on the Brexit, and then we've had a massive move back up to the upside here. You can see that we've had one day of follow through again on this bar right here, which really did kind of have a lot of people in the market. A bit of a head fake here where we pushed lower. Looks like the equities are going to go into a breakout to the downside. And then, of course, the central banks step in and protect their precious equity markets. That's really what happened here, guys. You know, there is demand. I'm not saying there isn't demand for equities, but I don't think there's this kind of demand. So Once again, I think that we are not going to move above 2130. We're going to stay pretty much where we are now and remain range bound. Now, the position of the predicted short, medium, and long-term differences on the equities do look pretty good here as they break above the zero line, as does the predicted MACD. But again, that predicted RSI, very important indicator here. And I'm just going to slide this over here so everybody can see it. And the reason why it's very important, because it's a momentum-based indicator. So we're at 61.5. We very well could see the equities break higher if more risk comes into the market. But my optimism on that remains guarded here, guys. I think we're just simply playing back and forth between supply and demand. We can see that we've got supply up here, we've got demand down here. Most of your major players, including myself, are selling the top and buying the bottom. Now, in this particular case, this past week, I was not buying the bottom on this equity move because, again, the markets are very unsettled with the Brexit vote and everything that's going on. So we really do need to take these things with a grain of salt. And for the most part, I think that the equities are going to go sideways into September. Same thing applies here to the DAX. We can see, but as the DAX recovers, in most cases, guys, the intermarket correlation here is a falling euro. So if the DAX continues to gain ground, then we're going to be looking at shorting the euro US this coming week. But if the euro continues to move higher with the DAX 30, then we know that something is fishy here. So we have to be a little cautious. For the DAX, again, you can see we've got somewhat of a bullish play here, but nowhere near as bullish as the S&P 500. We can see that a lot of market participants are comfortable buying the US equities, but they're not that comfortable buying the European equities at this time. Now, with oil for next week, oil is a major player on a lot of currencies we trade. At times it can be a driving factor for the equity markets also. But the key VantagePoint level, 48.69, we've had a very, very mildly bullish close here at the 48.99 level. Now, when we look at oil, it is a big player. Once again, we've got supply being filled along this particular line right here, and we've got demand for oil down here. So this is a very easy way to draw the trend lines in so everybody can see it. And then we look to our key VantagePoint indicators to assist us with directional bias. Now, right now, the bias is slightly to the downside here on the oil. So when we look at this, we've got our key level. I'm just going to bring this in a little shorter now that everybody can see how I've put the trend line in there. I'm just going to drag this over to get those key VantagePoint levels. Again, we're looking at, this is the key level we want to watch, 48.69, closing at 48.99. So we're basically just playing a range between these levels here. We're basically going sideways here on the predicted short, medium, and long-term differences. The neural index is saying we still potentially have some upside strength here, but as we can see the predicted MACD crossover, very good call from VantagePoint back here as oil continues to slide lower. If we break back below this zero line, that should be it for the top side on oil for a little while, and we're probably moving back down into this lower trend line area around this 46 level, and we'll see how it looks at that level. But it's perfectly normal for oil to be strong at this time of year up until about the mid to late July, and then oil starts turning the other way. This is a seasonality here, guys, so maybe a little bit more strength in oil, but I wouldn't be looking for a lot. Our predicted RSI, we're coming in at 48.2. Again, we're just trapped. Another way of identifying the supply and demand levels is using the RSI as a 60 and a 40 split. A break of that 60 is very bullish. A break of the 40, of course, is very bearish. Right now, we are slightly tipped to the downside for next week. Now, the same would apply to gold here. Now, once again with gold, to discuss this very briefly here, we've had a big move on gold up here on the Brexit. We look at the opening price of gold right here, okay, prior to the Brexit vote, and it was actually down in this level. So if we take this bar right out of play here, then gold is struggling here, guys. We have not made any gains since the night of the Brexit vote or the day after that. We've had zero follow through. It is still mildly bullish, while above 1297.50, the key VantagePoint level, but it's going to struggle. If we get a good non-farm payroll number, in my respectful opinion, shorts on gold could be very viable towards the mid and latter part of this week, because again, if we get a solid payroll number, much better than the last one, that's going to knock the wind out of gold here. That much I can pretty much tell you. So keep an eye on that, but until then, gold will remain with a slightly bullish tone, at least up until Wednesday on that ADP report. Now, when we look at gold, in most cases, we can assess that the euro moves with gold contracts. Gold up, euro up. So that is happening here to some degree. But once again, with the euro US, what I talked about in last week's Forex Weekly Outlook, if we take this bar out of the Brexit vote, this ridiculous bar from that Thursday night of the vote, we can see that basically there has been no further downside on the euro. It's actually starting to rise. So we can see each day we just kind of push a little bit higher, and that's what we want to identify. So right now, after that trend line break right here on the Brexit vote, there's been absolutely no follow through to the downside. This is something I did suggest in last week's Forex Weekly Outlook also, that it's going to be tricky for the euro to keep moving lower, in my respectful opinion, and it could be a false move to the downside, which of course it was. Now, that's not to say that the euro can't sell off this week. We've got a key vantage point level we're coming up against. Whoops, let me just redo that here so everybody can see it. 111.82, that's our key level going in to start the week. We've closed the week at 111.35, still bearish, but price is rising. So I expect the euro once again to go sideways up until the non-farm payroll number. Our neural index is saying we're going higher for Monday. I would agree with that to some degree. But, it is nice to see the additional indicators, the predicted RSI, back up inside that 40 level, getting ready to challenge the 50 level. So we'll look for that to progress. But towards midweek, if we get it, again, the ADP report will be through all of this presentation. It will be the first look into that non-farm payroll number on Friday. So if we get that solid ADP report, the euro is going to start moving lower. So again, 111.82, our trend line resistance right now is coming in about 114, anywhere between 113.50 and 114. I'll just draw another little line up here so everybody can see it. But again, if we take this bar out of this here, that would put the euro basically pretty much it's at fair value where it is. It's recovered its losses and it's sitting at about fair value, 111.50. I don't see a big push to the upside until at least the latter part of the week. And we've also, with the euro, remember guys, the risk event for that, of course, is the ECB on Thursday. And let's face it, the central bankers do nothing to help out these currencies. Now, the same thing would apply with US Swiss franc. We can see that we've got the US Swiss franc looks just like the dollar index chart here. We've got trend line resistance coming in about 98.50. We have stalled on that key vantage point level right here. I'm just going to draw it so everybody can see it here. 97.13. That's where the key vantage point 18-day predicted EMA is. I want to draw everybody's attention to this area right here. And again, price each day is making a new low off of this trend line. So that doesn't mean we are going to keep going lower, but if we can break through 97.13, then we are likely moving lower. To start the week, we may see a little bit of a push, but ultimately we are between supply and demand at 95.20, and that's our demand area where buyers are coming in, sellers are coming in around the 98 level. So that's the current situation, our key vantage point levels. The predicted MACD is a concern for shorts for me. With my own direct clients, we are continuing to stay on the long side of this, buying on dips down anywhere. We will continue to buy down into these dips into the 95 level, but we'll stand aside right here at this current vantage point level to some degree. Now, if we hold above 97.13 and the euro starts moving lower, longs are back on the table, probably Tuesday, Wednesday of next week for this particular pair. I think we're just going to go sideways, and then we are likely to move higher. We're just looking for these additional indicators from Vantage Point to support that, and right now they clearly don't. They're saying that we have more downside. Now, one of my favorite indicators here from Vantage Point is the medium term crossing over the long term predicted difference, and this is why why I would back away from the longs just yet, because that's telling me that the medium-term trend is weakening against the long-term trend. So it's a leading indicator, guys, that are saying that we're losing steam. We also have falling price action off a trend line right here. So again, it's going to be difficult. The only thing that could save us is 97.13, staying above that key vantage point 18-day predicted EMA. That may help us out here. Now, as we move into some of our additional pairs here, let's keep moving along on our different currency pairs. Now, the British pound US dollar here, guys, this is such a tricky pair to trade. With my own direct clients, I'm warning them to stay away from it. This is one of the few pairs that we actually had follow through here, and you can see the follow through. We hit a new low here after Brexit. We put in a new low the very next day, but we've had nothing since. Okay, so I'm not saying that the British pound is going to turn around tomorrow or the next day, but I'm saying that we have to be cautious of a false downside break. And once again, is the Brexit vote really a bad thing for the UK? That's a very debatable topic. In my respectful opinion, I applaud the people in the UK for leaving. I think it was a smart play, you know, but not everybody would agree with what I just said. So that's what makes a market. So right now, you know, most economies do very well with a weak currency. So if that's the biggest problem the UK has, is a weak currency, that's not really a big problem here, guys, because the FTSE is screaming higher. So they've got their strong equity markets. Their currency is weakening, so their exports are going to be looking good. This is not a negative. It's difficult for me to find the negative in this for the UK. So there's going to be a lot of rhetoric around this. So this is why I say we're going to see if prices is going to stabilize. Right now, it does appear to be stabilizing around this 132 area. We've closed 132.62. If we break below 130, I'm going to get very excited about shorts. But I'm just not convinced that that's going to happen at this particular time. We can see our short-term indicators from VantagePoint are warning higher. The neural index is down, but we can also assess here that the medium-term crossover is getting ready to cross the long-term crossover, much like what I just showed on US Swiss franc to the downside, but this one is to the upside. So it's warning us in the short and the medium term, the downside trend, which was firmly in place, is losing momentum to the downside. Our predicted RSI, we can see that it is where it should be, but it is going sideways. We are not getting any more push to the downside. We're sitting at 23.5. Is it oversold? Maybe it is, maybe it isn't. That's up to the market to determine, but right now there is not a lot of downward momentum here since the Brexit vote. That's the bottom line here. So I would be quietly looking for longs, but I think it's a little too early for that. I think we would have to wait until after the non-farm payroll. Now, as we look at the dollar yen this week, this is most people don't like the yen. I'm not in that camp. I actually like the dollar yen pair trade. Not a bad trade at all here. Now, VantagePoint has made the call on this basically on June the 3rd to start shorting this. This is an indisputable fact. We've come down, we've kept pushing lower, price action has kept pushing it lower, and then we've stabilized. We've stabilized here and we stabilized again here, but each time it broke. So when this one broke through, then we started to stabilize along this area. And we stabilized all the way along until the Brexit vote, and then we plummeted on this bar. So if we take out this bar, if I was just to erase this Brexit foolishness, and that's all I can call it here, is basically we're coming back up to this area. What brings into light here is the breakout point of approximately 103.70. So the market is trying to get back up there. We've got 103.20 on the key vantage point level. We would have to take that level out to really get excited about longs, and more importantly, the 104.52. I'm not convinced that that is going to happen at all. As I've discussed with the equity markets, the S&P 500 specifically, that essentially take the Brexit stuff out, the S&P was probably selling off anyway, up in that 2120 area. The seasonality of equities not being great in the summer or the fall, these are all normal occurrences. So likely to continue here. The dollar yen, the neural index is still pointing down. We can see this right here, as is the predicted short, medium, and long-term differences. Our predicted MACD is getting oversold, but we can see that a leading indicator, that the RSI has come up to the 40 level, as I've discussed, and rejected it. okay, and then it started moving back lower. So right now we have the key levels from VantagePoint: 102.70, 103.20, 104.52. Only a sustained break of 104.52 takes the pressure off the downside, again, in my respectful opinion, on this. So we're going to keep an eye on this next week, but right now I think that the only thing that could maybe give dollar yen a little bit of a push to the upside is a good non-farm payroll number. Now, as we move into our final three pairs, our commodity currencies. Now, again, I'm going to talk about this again, and this is the Brexit vote here. So if I just take this bar, let's just ignore this bar here for a second here, guys. We've put in another top right here, which actually formed a swing high, which created a demand, or a supply line, excuse me, created a trend line. Price has been falling off of this area as I move my cursor down. We have been setting lower lows and higher. Basically, we've been setting lower lows and lower highs. So price continues to move, but now we're getting into an interesting area. We're all tangled up around the key VantagePoint 18-day predicted EMA, 129.04, closing the week at 129.07. Now, if oil turns, guys, and we can hold above this 129.04 or thereabouts, or retake that level midweek, then the US Canada is going to turn back up to the upside. But right now, the key support level is coming down here at about the 126.60 area, 126.70. That's where I would be more inclined to be a buyer here, unless I get an earlier signal from VantagePoint. And right now, I'm having trouble getting that signal. We've got 48.4. That's suggesting here that we're going sideways here a little bit, but we are moving lower. Below the 50 is bearish, above the 50 is bearish, below 40 is very bearish, and that's when we want to start selling low. And above 60, we want to start buying high. So we're not really in that camp just yet, but I do think we can get there. Now, the neural index, again, the predicted short, medium, and long-term differences, still pointing down, so we're likely to have a little bit further downside. But here, when we're always looking for that needle in the haystack, I see it right here with the predicted MACD. We have a crossover there, and we're breaking above the zero line. So it's telling me that any downside we have is likely limited. So your buy zone for next week's probably going to be between 128 and 127, if we can even get down there. I'm watching and hoping potentially that key VantagePoint level at 129.04 will actually hold, and maybe we can start getting long earlier and look for a trend line break, pushing us back up to the former swing highs in the 132 area. That would be the best case scenario for me. Now, as we move into our Aussie US, New Zealand US, basically a very similar trade here, guys. But again, I'm gonna have a little bit of fun with this week here. I've drawn a trend line. I've drawn a trend line off of that swing high, or from the Brexit, but again, we had a crash on this after the Brexit. We created a new trend line down here, and you can see that price on each one of those bars ever since has been rising. The VantagePoint short-term predicted crossover and the neural index gave us a very early warning sign of this, and the additional critical VantagePoint level, 74.31, we've closed above it at 74.80. Price is rising off of this trend line. We should be buyers of this. Our predicted short, medium, and long-term differences continue to break above the zero line, as does the neural index. And a leading indicator here, the Australian-New Zealand pair that I've talked about that was a trade on Trader Planet, still continues to hold above the stop level of 104, suggesting that the Aussie is gaining strength. Euro Australia has done well, and the buying Aussie dollars across the board has actually done well. Aussie New Zealand still a little bit slow, but if it breaks below 104, then we can get excited about shorting Aussie US. But I don't see that happening just yet, or potentially at all. So again, watch your 74.31 to start the week. Our indicators from VantagePoint, our predicted MACD above the zero line, predicted RSI, there we go again, 62, where most people are getting ready to short. We are getting ready to add to our long positions. That's built. Momentum is building here, guys. Because the RSI is at 70, does that mean I'm going to short it? No, it does not. It most certainly does not. So we'll watch this one closely, but right now it would appear that the Aussie is getting ready to move back towards the former swing high up at the 76.50 level. Now, So that is where our trend line comes in, and if it's going to fail, that is the level where that is going to happen. The same or very similar with New Zealand US, guys. Very, very similar trade, but New Zealand has been doing slightly better than the Aussie. There's no question about it. We've had that push lower here, wiping out all the long trades here. But if we look at where this bar opened that day, we're basically coming right back to where we were. And this is where I said in last week's Forex Weekly Outlook about how the market constantly overshoots the mark. They run stops on the long side, they run stops on the short side, then we come back, and usually we just continue with price prior to that event risk, which in this case was significant. That puts us in a blocked out area right around here. Okay, so I'm just going to draw that in a little bit better, but it's telling me that essentially, we're pretty much right back to, a day or two below before the Brexit vote. We're right back to where we were. Two things can happen here. If we're going to have further risk-off scenario, then New Zealand will start to sell off towards the 72 area. But if 72 breaks and we start breaking above this former swing high, longs are majorly in play here. So, right now it's tough to call which way it's going to go, but we can identify that we have a swing low here and price continues to rise off of these levels. That is an indisputable fact. We're holding above and closing above all three of these key vantage point levels, 71.34, 71.10, and 70.67, the major support level as identified by VantagePoint. So this is the level we keep our eyes on, but also be careful around the between 72 and 73, because this is where, again, this former swing high resides. So not an easy week coming up here, guys. Whenever we have a central bank talking like the ECB, whenever we have an ADP report that leading into a non-farm payroll, it's going to be very choppy midweek. But I think we're just going to remain range bound until that particular time on most of your major pairs.